Welcome back to another YouTube video, guys. I appreciate you guys for tuning in to today's video. And today's video, we'll be going over gold. That is, of course, XAUUSD. And today is currently June 26th. So let's go ahead and jump on to this breakdown. So first things first, we're going to go ahead and show you guys the exact play-by-play that we had sent in our private Discord, as well as in our free Discord chat for our community to see. So this was the Sunday breakdown, right? So June 25th. So as you can see, price was obviously closed. The market was closed. And we have our drawings drawn up, right? So I'm going to go ahead and break this down prior to going to the live chart. And the first thing that I want to show is the fact that we had three separate possibilities that we have happening here, right? So we have three different setups that we would be potentially looking for. So in case scenario one was the fact that if price were to open up and reject below the open of the week, we would look for price to continue bearish, coming below the weekly low and breaking these major structures, right? Now, case scenario two was the fact that we would break above this 1923 range, reject, and use this as buy side liquidity to push us to higher structure. And as far as continuation to this move, we were looking to see if we would break this structure and retest the high of day and use this previous 30-minute supply as buy side liquidity now to clear this out and continue into this zone. So this was case scenario number two. And case scenario number three was, of course, price getting up to this high, but instead of breaking and rejecting above the high, it would be actually retesting and rejecting the high of day to continue short, right? So I'm going to leave this up for a second just so you guys can kind of analyze and study exactly the three case scenarios that we are looking for. And then I'm going to go ahead and switch over to the next picture that you're going to see here, which was prior to the actual move happening. Obviously, Sunday open was somewhere along this line right here. And we noticed that price actually broke above, rejected, and held above this 15-minute liquidity, as we have shown in this picture here. Correct? Breaking above, rejecting this 15-minute liquidity to then continue to the bullish side. And of course, as we see, this played out perfectly, closing and continuing above this 15-minute and continuing bullish, attacking this high of day, which I will flash it back one more time, attacking this high of day as we did perfectly. Now, let's go ahead and move this side by side. Now, after that point, we noticed a lot of rejection, which we were looking for this to play out, which was rejection below this high of day for continuation to the short side, right? Which I'm going to go ahead and now and break down on the live chart. So let's make sure we have this sharing on the right screen, and we do. So perfect. Let's put this here. Perfect. All right, so I'm gonna go ahead and mute my drawings and start off by coming up to this higher time frame. So the first thing, as I'm pretty sure I mentioned this in one of the previous gold breakdown videos on my channel, but just to kind of go over it once again very briefly, a key level that we're looking at is going to be this 1937 range, right? And the reason I say that is because it's simply the fact that I'm gonna go ahead and get this drawing tool. If we draw a line on this 1937, right? Obviously, my drawing isn't the greatest, so it's not perfectly on dot, but we can see that 1937 rejected in this area and then continue to push for a large amount of time, right? Okay, now, once we see price come right back to the same area, notice how price rejects quite a few times at this area, right? We can agree price was rejecting at this area quite a few times up until this point here, where we gave our first indication that price was continuing bearish, right? So if I go ahead and undo all these drawings, you're going to notice the fact that in this area here, price had traded within this zone. I want to say it was roughly a month long, right? Because mind you, we're on the 4-hour time frame. So from this point that is right here, all the way to this point where we broke, it was close to a month that we ranged in between this zone from, let's go ahead and make this a little bit more clear. Roughly from this zone here. Right, so we can agree that price is ranging in between this zone. Not a consolidation because it's moving with a lot of volume to each and every side, versus where a consolidation would be a tighter zone. So you're gonna notice, as I had shown on my previous gold breakdown, that there was a major supply that was being respected here along the lines of something like that, as well as a major demand that was being respected along the lines of something like that, right? But now, hence the fact that if we were to take a box from way over here, which I can't see the data of yet, and drag this along, and grab our eraser, let's erase these markings, we can agree that this is simply reacting to the same zone here all over again, right? As well as it did here. So the reason we saw a lot of bullish volume from this area was because it simply was just liquidity, right? Now we're gonna notice that I'm gonna clear this all off so I can move this across. We're gonna notice that if you follow along with my cursor across to the 1937 range that I have here, you're gonna see we finally broke. I'm gonna draw a circle right here, right? Well, if it draws perfect, that'd be cool. So let's move this simply like that. Cool. So you're gonna notice that for the first time we broke here and cleared this zone of 1937, we retraced, and then we continue to push bearish below it, right? Now, I'm gonna erase that, and I'm going to draw another line right here at the 1937 range, right? So we can all agree that as price came back to react from this level, we noticed a large amount of bearish volume push, right? So reason I'm showing this level and why it's so important was simply because the Friday breakdown that I had uploaded on, I believe it was the 23rd or the 24th, I uploaded that video, was a super similar trade to the trade that I caught today. And honestly, it was basically reacting to that same zone of 1937, right? So without further ado, I'm going to go ahead and dive down into this H1 and get more technical on this breakdown. But prior to unmuting all of my drawings, I'm just simply going to just show out the 1937 range once again, but on the H4 time frame now, right? So if I go ahead and just annotate a line across again, right around 1937 was roughly right around here. So we're going to notice that the Friday move that I caught was a rejection to that 1937 range, right? Cool. Now, also, given that we rejected several times along this push, we rejected yet again right here. And then we continue to push bearish. So obviously, 1937 is a large area of liquidity. Whether it were to flip and use this as a bullish demand zone, or whether we're to use it as a supply zone, there is liquidity here undeniably, right? And we know that because, again, if you follow my cursor along the same line, you notice that here in this area, it reacted bullishly, again, bullishly here, again, bullishly here, again, once we broke this area, bullishly again, and it just happened to break now to be bearish, right? So let's go ahead and unmute some of these drawings to actually dive into today's trade. Now let's go ahead and move this out of the way. Now, cool. As you're going to notice, the 1937 trade from last week, we'll dive down to the 30-minute time frame, was this trade here, which was a rejection, as you see, to 1937. And then let me go ahead and open up this arrow, which was a rejection to the 1937 area here to then continue short, right? Obviously, I closed with more, well, I entered with more confluence on the lower time frame, and then as you can tell, this trade executed to about 1 to 4 roughly prior to me exiting the trade, and it obviously pushed for a little bit more. Now I'm gonna go ahead and show you one other thing, right? So notice this 1932 line that I have here, which is a area of liquidity on the weekly time frame, right? So you might be wondering what this drawing means. Basically, the dollar sign is basically just identifying that there's liquidity, and W just stands for weekly, as well as 15-minute liquidity, and that's so on and so forth. So if I come and jot down that number, which was 1932 300, right? Let's go ahead and come back up to the weekly prior to showing the example. 1932 300. So if we look back and see on the weekly time frame, and of course we like to tend to stay more relative, but in the case that we're hitting a large, like a very, very key price, then we want to just see exactly what was happening at these ranges, right? So if we come to 1932 back here, we notice that this falls perfectly at 1932. And if you follow my cursor all the way to the right side of the screen, somewhere like here, you're going to notice that we rejected and we shorted one more time today, right? Not only did we do that then, but we also rejected at areas like this. And so 1932 is just a key level to take note of, right? So that's simply what I wanted to show, the fact that we shorted from this area once, as well as another area here. And then now we're currently trading in the 1932 range now. So we're currently just waiting to see how we're reacting, how we're playing out to it in present time, right? So let's dive down back to the 15-minute and show you the actual execution itself, right? So here we are. So for those of you that are familiar with my 9 to 5 setup, I'm not going to be getting too in depth on that breakdown, or that setup, I should say, today, but that's why you're going to see the H4 open as well as the H4 close listed here. But let's dive down right around here. Cool. So 8:45, 9 a.m. So a few things to take note of, right? So we know that 1932 is a large level, and it looks as if it was a large level of bullish volume, of bearish liquidity. So we were just being attentive to the fact that we are rejecting at 1932, correct? So if we come back to this 1932 area here, we notice this is where we had caught this position of this bearish move. And then so on and so forth. If we keep pushing back to the left, we'll notice that around this 1932 area, we're seeing a lot of bearish volume open up, right? So simple as when we jumped on the charts, it was around 7:30 pre-New York, which is right around here. And we noticed that, okay, so first things first, Sunday was around here for the open, right? So Sunday opened up here, and we noticed that it pushed above this 15-minute zone that we were looking at, and it pushed and rejected and closed below this high of day. Hence, if you go back to the beginning of this video, you'll see that prior to any of this opening, we were looking at it something like this, and we were waiting to see if that would be one of the case scenarios that would play out, right? So upon getting on the charts around 7:30ish, 7:45, 7:15, we're noticing that, okay, the move has pushed bullish, but the volume is starting to slow down closer to the open of our session, right? So you're going to notice that obviously, as we see here, is a lot of bullish volume, and it kind of started to die off after this doji candle here and switch to bearish. Okay, and then the bullish volume is just rejecting at this 1932 range back to back to back. And as you see, there's several 15-minute closes in the same area, which is just a clear indication that we are rejecting. And then they pushed at, let's see what time this was on the dot. I have to move this out of my way. So at 8:30 on the dot, they pushed with this bullish volume, which is just a sort of a fake out to let people think that we're coming closer to this high of day. And I'll show this example in the lower time frame, but we pushed and then we continued to reject. So obviously, as you can see, my entry was in between this 15-minute time frame, but I had let the first 15-minute close of rejection to this bullish volume, right? So obviously, there's a few things that are going on here. We're rejecting this 1932 range, which it's muted because I have it only open to the higher time frame, but 1932 would fall something like this. So we are rejecting to this 1932 range completely throughout all of the session, as well as we are closing below my H4 close kill zone, which will be a part of our 9 to 5 setup. as well as in between this 15-minute, we're getting enough price action, which led us to this entry. And then the rest of the trade is pretty self-explanatory. After we close below this structure point, this is a clear indication that we would come and target our other side of our 9 to 5 setup, which is this H4 open. And the rest of the trade, like I said, is pretty self-explanatory. We reached there. We were initially trying to reach this liquidity zone to see if we would reject to continue bullish. As you can tell, we closed, we wicked below, and we closed, and we actually tapped into the open of the week, but we still traded bullish above the open of the week. So we closed our trade at around a 1 to 4, which would be something around the lines of this, something like that, like 1 to 4.5. So the rest of the trade, like I said, is pretty self-explanatory, but I'm going to dive down into the 5-minute time frame to show my actual entry. So let's go ahead and change this cursor so we don't get confused with any sort of drawings. And here goes the entry. So upon the 5-minute closing below this minor lower high, a lower low, excuse me, I went ahead and executed, right? So if you can see, price on the lower time frame is forming a higher high, a higher low, a higher high, a higher low, but we're failing to make a higher high on these pushes, correct? So once we failed again for the third time here, and then as well as we close below the lower low, because at this point right here, I'm going to mark out the higher lows with these checks. So at this point here, the higher low was obviously at this check mark here. So upon closing below this higher low, I went ahead and executed this trade. My stop loss was very tight, which is above this previous 15-minute candle, which rejected this bullish volume. Because in the case that we were to break above this 1932, we would be expecting to see something like this. And either A, case scenario 1, which we had drawn up at the beginning of the video, would happen where we would break this and continue higher. Or case scenario 2 would happen where we would notice a rejection to the high of the day, which could have potentially just given us a better entry to this trade. So that's the reason to having this type of a stop loss. And then again, the rest of the trade is pretty self-explanatory. The stop loss is roughly around like 16 to 20 pips. And the 1932 was the key level to take note of, as well as the 1937, which would have been looking for a reaction to if we would have broken this range. 1937 would fall right around here. So yeah, that's basically the breakdown for gold. And I will be following this video up with a more in-depth breakdown of what I am thinking my bias is for the rest of the week. I wanted to make this video very quick and short, but I hope you guys gathered some value from this video. And again, I appreciate you guys for watching this video. If you guys did gather any value, don't forget to subscribe and hit the like button. I appreciate you guys again, and take care and enjoy your week.